I'm Tammy Schaefer, your on-air producer, and today we are connecting with DORA, Colorado's Department of Regulatory Agencies, and Rebecca Laurie is here.
Hi, Tammy.
Hosting with us today. So great to see you.
It's always great to see you.
Thank you. Yeah, and it's great to actually get here when you've got weather like that outside.
It really is. It got pretty chilly pretty quickly.
Didn't it? Yeah. So on to what we're discussing. We'll be looking at the Division of Securities today.
Yes. So our guest today, and Tammy, as you know, we strive to come on at least once a month and bring on leaders from the Department of Regulatory Agencies to be able to talk about different regulatory issues that are taking place, to demystify the regulatory process, and to discuss really current issues, which is what we're going to be doing today with the Colorado Securities Commissioner, Gerald Rome, who is our guest today. Mr. Rome, he became the Securities Commissioner in 2014, and in that role he is responsible for the administration of the Colorado Securities Act, the Colorado's Commodity Code, the Colorado Municipal Bond Supervision Act, and the Local Government Investment Pool Trust Fund Administration and Enforcement Act, if that's not a mouthful enough.
Yes.
And in addition, Commissioner Rome has served on the board of directors of the North American Securities Administrators Association, known as NASA, not the space organization, but NASA. The financial organization. He is a known industry leader, expert, and we're very, very glad to have the commissioner here today to talk to us about a very hot issue, in fact, several hot issues.
Yes.
And the first one we're going to tackle is crowdfunding. Then
it's becoming huge.
It's
is. Already become huge.
Yes,
yeah.
It's there.
It's there.
And also cryptocurrency, which is another very hot and big issue that everyone is seeing in the news.
Which I feel like I'm way behind the wave on.
Well, we're going to get up on that wave, at least about what's happening in Colorado, by talking to Commissioner Rome. So welcome. Thank you for coming.
Great to be here, Tammy. Thanks for having us down.
We're happy to.
Yeah, always happy to come down and talk to you. These two issues, crowdfunding and cryptocurrency and blockchain, are pretty on the forefront of what we're doing at the division. So happy to be here and talk about those issues with you.
Thank you so much.
So for those folks who really don't know what crowdfunding is, Jerry, Commissioner Rome, could you tell us what's crowdfunding?
Sure. So let's start off by talking just a little bit about what it is. We all know, I think we all know what Kickstarter is, right? So
right.
It's an internet program where you can go on and support someone's project or company, and typically what you do is you pay them a small amount of money, and in return you get a t-shirt or, first dibs on the product that they're producing. So if someone needs money to produce an album, you donate through Kickstarter, and in return you get that album when it first gets cut off the presses. Well, crowdfunding is a little bit different. The idea is you are through the internet, you get an opportunity to invest in a company. So it's not like getting a gift back or a product back, but you actually become a shareholder with that company, a part owner of that company. So it's more of a longer-term relationship, and it's all internet-based. So these offerings go up on the internet. The notion of crowdfunding comes from you want funding from a large number of people. Right. So you get a small amount of money from a large number of people. So the way crowdfunding came about, there's some history to it with the Jobs Act that was passed in 2010, Jumpstart Our Businesses. They enacted federal crowdfunding. And unfortunately, the SEC was supposed to enact rules, but they didn't get around to finalizing those rules till May of 2016. So in between this time period, a number of states started doing crowdfunding on their own. The notion is that you have small or emerging businesses, and usually these kinds of crowdfunding is there to fill a gap for those businesses when they want to raise money. Typically, if you're starting a business, you might fund it on your own, borrow money on your own. You tap out your friends and your family, and then you reach a point where you have to go. You need more money, more capital beyond that. The venture capitalists aren't ready to come in because your company's probably too small.
You're right.
It doesn't have a
You don't have
financial
enough
history.
inventory or the production or.
Right, exactly. And so this notion was, well, let's try and fill in that little gap for these emerging companies, raising capital for small businesses. And so the way it's supposed to work is you have a company, they want to raise the money. They're called the issuer. In Colorado, we passed our Crowdfunding Act in the summer of 2015, and it became law in August of 2015. So what they have to use is an online intermediary. So the intermediary sets up a website, contracts with the issuer, figures out, they create some sort of website designed to attract investors, and then the intermediary will handle the transactions. Like if someone wants to invest, then they'll handle that transaction. They'll get the information they need from the investor, and act sort of as a go-between between the issuer and the companies. So the interesting part was when crowdfunding first came about, there was a big fear on the part of regulators. We were, it's really unusual to offer stock over the internet. Before 2012, that in fact was illegal. The other problem is with retail investors, with less sophisticated investors, you're afraid to provide them opportunities to invest in companies that may not be successful. So we know that small companies, that a large amount of them do fail. So when crowdfunding came about, we wanted to create this balance between protecting investors and giving some sort of access to companies to this capital.
Okay, so we'll talk more about how the Department of Regulatory Agencies and the Securities Commission stays on top of this to protect investors. Today we're connecting with Colorado's Department of Regulatory Agencies, and we're talking with Gerald Rome, the Commissioner of Securities, along with Rebecca Laurie. And this is going to be interesting because we're just talking about crowdfunding, and as we get into the show, we're going to talk about cryptocurrency and a lot of those things that if we haven't learned about them, it's time.
Yes, exactly. And, talking with Commissioner Rome, he was just getting into the framework of how
Exactly.
Crowdfunding works, what is crowdfunding, and some of the legislation that's been passed in Colorado. So, Commissioner, what are some of the examples that we're seeing, or what was your overall vision, I suppose, and is what's happening with crowdfunding matching that?
Sure. So we talked a little bit about the federal crowdfunding and the delay in getting the rules passed till 2016, and the states came in and filled the gap because they saw this as an opportunity to provide the capital to the small businesses. And the notion is that if you have a local business, and the perfect example is the brewery. We know how the craft brewery industry has taken off locally here, and the idea is if you wanted to start your own brewery, and you're a beer maker, you can start working on that, but at some point you may need some capital to expand your operations, buy space to serve your beer and whatnot. So the idea is to allow those small companies to use sort of their customer base to be their crowd that funds their operations.
I like it because it seems like it's that kind of put your money where your mouth is. You fund what you like to see. So the people who are going to buy the product are the people who are already behind it.
Exactly. So not only does the business get some sort of customer loyalty, because if you invest in that company, that's where you're going to go.
Now it matters to you.
Yeah, exactly. And so this notion of having federal crowdfunding. I mean, someone in Oregon is not going to invest in a brewery in Denver.
Right.
I mean, it simply doesn't make sense to me, and that's why I really think crowdfunding is done locally at the local level. So we talked earlier about trying to have a balance between, providing capital or at least access to capital for small businesses. But we also, we're in the business as a securities regulator of protecting investors. So when we first started looking at crowdfunding, we were worried about having retail investors invest in these smaller companies simply because we know most of them fail. The stats don't look good if you want to start a small business, and we're happy when they do succeed, but most of the time it's problematic. So we didn't want small investors who may not be as sophisticated as other investors to investing large sums of their retirement fund in a local startup company. So we put some restrictions in the Crowdfunding Act, and for instance, if you're not a sophisticated investor, and you want to invest in your local brewery, we put in a cap of $5,000.
Okay.
That's the max you can invest. But if you're qualified as a sophisticated investor, then there's no max cap as to what you can invest in the smaller company.
So that's some of the regulations that would go with a not federal, but a
Local
Right.
crowdfunding
Would that be a state
structure.
a state crowdfunding structure then?
Right.
Right.
Right. So that's some of the restrictions. If you want to do Colorado crowdfunding, then your business has to be a Colorado business. Your investors have to be Colorado investors, and you have to use the money here in Colorado. And that's just an aspect of securities regulation. Once you start crossing state lines, and then you have to start complying with what the Securities and Exchange Commission requires you to do. But if everything stays in state, then you're fine.
So there was an example that you had talked about earlier of the very first business that took advantage of this new crowdfunding investment source.
Sure. The one of the issues. Let's start with the issue first. Is that we the bill was signed into law in 2015. The governor signed it and became effective in August of 2015. And we were all excited about raising money for small businesses here in Colorado. And after it got signed into law, nothing happened. We had some folks sign up as the online intermediaries, so the act as the go-between, but they struggled with putting deals together, and we didn't see any crowdfunding business or offerings until just a couple months ago. And it was a concern for us. Crowdfunding was working in other states. We modeled our act after the law in Indiana. It was working in Indiana.
Okay.
I know it was. I've talked to the folks along the Rocky Mountain region. It's working in Montana, in New Mexico, and in Texas. But for some reason, it just wasn't working here. And we finally got our first crowdfunding offering a couple of months ago, and it was a hemp farm on the western slope. I think they're called Paradigm. And it's interesting because one of the backers of that hemp growing business on the western slope is Senator Bob Coram, who we actually talked to about our crowdfunding bill when it was going through the legislature. So it's interesting that he saw it, the advantages to it. And when we talked to him about it, he saw this as an opportunity to grow businesses on an area of the western slope that they struggle with that sort of thing.
So given that, you decided that you needed to get the word out a little broader, and you just recently had a forum about crowdfunding. Can you talk a little bit about that? It was really very recent, just like last week, wasn't it?
Yes. So I mean, everyone was wondering, well, why is this not happening?
Right.
Yeah. And so we heard anecdotally, there was a problem here, a problem there. And so we said, well, what if we get a panel of experts together,
Okay.
and put them together and put a forum together with a moderator, and then we can discuss this issue in the open, and it achieves two things. One, we get to talk about what the people who are actually trying to do this, what they see the issues as, and two, we get to market, crowdfunding to a wider crowd out there for us.
Right. So the people who are interested can learn more and probably
Right.
reveal to you what some of the hangups are.
Right, exactly. And I think when it so let's talk a little bit about the forum. So we brought in a securities lawyer who was actively involved in the crowdfunding and does securities transactions. We brought in a professor from CU, Andrew Schwartz, who's done a lot of writing and research on crowdfunding. He just came back from New Zealand, where crowdfunding is apparently going phenomenally.
Wow.
Yeah. So he shared his experience with us as to what's going on in New Zealand. We had an individual from one of our incubators called Boomtown. It's an incubator up in Boulder where they try and match small businesses with venture capitalists. And so, they're doing the same thing that we're trying to do with crowdfunding. And then Carl Dakin, who actually put together the Paradigm deal, he's one of the two people that are now acting as online intermediaries. So he's actually had to, struggle for a while trying to work out all the kinks in order to get the process through smoothly and safely. And I think that out of that forum, we got some good ideas. I think that what we learned is that part of the problem is just more of a cultural problem. People not being aware of crowdfunding and how crowdfunding works. Typically, it's sort of outside the mainstream of raising capital for small companies.
Sure. And I was just going to say, for example, I know about it. I've not participated in it. And that may be the case with many people. They know about it, think it's probably a good idea to do it, but they're not going to stick their money in there just yet.
So part of the issue is just getting out there and marketing it, marketing the concept. Two, the second problem is many people think that you can just, take an offering and throw it up on the internet and people are going to come and invest their money in your company.
My idea is so great. Everybody wants to help me pay for it, right?
Right, exactly. And you just get your own little website and you're up there and the money's going to come rolling in. What we found out is that these folks, the business people, they need to they may be good beer makers, right?
Right.
Are good, that maybe they want to do a yoga facility, and maybe they're good at teaching yoga, but they may not be experts in figuring out how to raise money
In finance, yeah.
Exactly.
Or run a business.
Exactly. Both of those things. And so the first thing that we're learning from Carl, who's done a couple of these now, is that businesses have to learn how to create their own crowd, right? And then they have to learn. Yeah, and so, those are the folks that are going to invest in your brewery, as we talked about before, the customers who come in. So how do you get the message out to those people? So you need to structure your offering, and then learn how to deal with, once you get the capital in, you have all these shareholders in your company, and you now have to handle that. So those are sort of the issues we talked about at the forum.
Perfect. Thank you so much, Gerald Rome, Securities Commissioner with Colorado's Department of Regulatory Agencies, and Rebecca Laurie is here, and we're going to talk with them more as we come back, and I think we're going to focus more into the Bitcoin offerings. Thanks so much for staying with us today here on Connect and Collaborate. We are talking with the Division of Securities as part of Colorado's Department of Regulatory Agencies. Rebecca Laurie is here from DORA, along with Commissioner Gerald Rome.
Yes, we just were talking about crowdfunding, some of the challenges, some of the opportunities, and what we wanted to make sure is that people knew where to go if they had interest in Colorado crowdfunding and wanted to find out more about the Crowdfunding Act, and they can go to our website, which is DORA.ca. www.colorado.gov/DOS, which stands for Division of Securities, and there's information about it posted there. Now switching topics, we are getting into an area here with cryptocurrency, which really is quite groundbreaking.
Yeah.
But talking to the commissioner about it, it's actually, not so different than a lot of other trends that have certainly come the way, of the investors'
Really?
sphere in the past. So, Jerry, maybe you can set up a little bit of what is cryptocurrency and talk about this whole idea of ICOs.
Sure, it's an emerging area, and it's very interesting area, and there's a lot going on that people just aren't aware of right now. But ICOs are simply initial coin offerings. We all know what IPOs are, right? Initial public offerings. Well, these are initial coin offerings. And it actually is a form of crowdfunding because it's internet-based, and they want to actually raise capital from a large group of people. So it is a version of crowdfunding. But I think the best place to start is to talk a little bit about Bitcoin, because we all know, I think, some things about Bitcoin. It's simply an asset that was developed back in 2009 or 2010, and it was designed to work like currency. And the interesting thing about Bitcoin is, it's a digital currency. So you can't hold a Bitcoin, you can't put a Bitcoin bill in your wallet.
Right.
It's all digitalized.
So you can keep track of it on your phone,
Right.
probably.
Yes, you can.
But there's no hard asset.
Yeah, there's no,
Right.
There's no dollar bill. There's no coin,
Right.
Yes.
Right.
quarters or nickels or anything.
Yeah, so you can't go down to, you can't go to the store and pay, for Coke with your with a
I'm picturing the
Bitcoin.
change machine. If you
Yeah.
just put a dollar in and some
Right.
Bitcoin fall out, it's not going to happen.
And you can buy some products. Some companies will accept Bitcoins for their product, but there is a secondary market for Bitcoin. You can buy and sell Bitcoin through these various exchanges. And I think we were talking a little bit about this off air with Tammy, but it's very interesting what's happened with the value of Bitcoin over the years.
Yes, it is.
In 2010, shortly after Bitcoin came about, you could buy one Bitcoin for 7 cents. So, which means you could buy a bunch of Bitcoin for, $1,000. 1 year ago, that Bitcoin would sell for $700, which, if you bought them way back in 2010, you made quite a bit of money. But today, the price of Bitcoin went over $7,500.
Yeah.
Which is simply amazing to me.
So if I had bought $1,000 of Bitcoin in 2010,
which is what we all said about Apple or Google
Sure.
or even AT&T way back when, right?
Yeah.
right? But I think I have somebody on the other side of this door that maybe did. So I'm envious.
Yeah. But the interesting thing is the value of the Bitcoin is only based upon what someone else is willing
Sure.
to pay you for that, and which is the definition of speculative, right? That's a speculative
Well,
investment.
that opinion could change at any time.
Right. And who knows if that, it's a bubble. I mean, to go from 700 a year ago to 7,500 today, you'd have to think that that's some sort of bubble, and that bubble's going to pop. And I think once people who invest in Bitcoin get a notion that the market may be going down, then that's just going to kind of like snowball into a big event, and the whole market may crash. Who knows?
So who determines how much it is? Kind of everybody? It's kind of
It's the market, right?
it's the market.
Right.
Yeah.
I mean, if you wanted to buy Bitcoin, you say, well, do I want to pay 7,500 for one Bitcoin right now? And you make that decision. If you say no, and everyone else, says the same thing, then people who want to sell, that price is going to go down and sell at a lower price. So it's all
Okay.
market driven.
Right.
But Bitcoin's interesting, but really where things are changing where these initial coin offerings are coming from is the use of blockchain. So when you do, so here's an easy explanation of blockchain. When you make a Bitcoin transaction, then you don't go to your bank and make that transaction. It actually happens on computers through the internet, on a piece of blockchain, which is just computer code that exists on a number of different computers around the world. So if it's what they call a distributed ledger.
Okay.
So, and by distributed, it means it's on a number of different computer networks that are not connected, but they all keep track of the same transactions.
No paper ledger.
Right.
Right.
So if you go to a bank, I mean, the bank keeps track of all your financial transactions, your checks, your credit cards. And so all that, they're sort of the go-between if you use your credit card, they're the go-between for what you're buying and, the money transfers through the bank. And they handle the ledger and they keep track of that. Well, with blockchain, they eliminate the middleman. They eliminate the banks. And that's what makes everyone who's into it excited about it. You've heard the term fintech, financial technology,
Right.
which is just using technology in financial transactions. The intent of fintech is to eliminate all the middlemen. So you have blockchain doing the Bitcoin transactions, and what's happened is people have developed blockchain to go beyond just simple money transactions. So now you can do securities transactions using blockchain, and certain stocks or bonds can be sold through blockchain. Again, when you do that, you're eliminating the middleman. You're eliminating the brokers, the dealers, the exchanges in doing that. So the notion of blockchain develops. There's this thing called smart contracts.
Okay.
And so smart contracts are just software that has the terms of the contract baked into the software. And you take these smart contracts and you put them on the blockchain. And it's a way of eliminating the lawyers in this world.
So you wanted to actually discuss the DAO?
Right. So we're getting to that. So what they've done is they've developed these organizations. So they're called DAOs, DAO, and it stands for Decentralized Autonomous Organizations. And the only place they exist is on blockchain. So they use smart contracts and they put the smart contracts on the blockchains, and they set up these organizations that act like corporations, but they're not corporations because they're not filed with the Secretary of State. They're not legal entities. They're just these decentralized autonomous organizations that exist on blockchain. And what they've done is they've enabled these DAOs to offer coins to raise money. So they'll offer coins to investors. The money will come back to this DAO, the DAO, and the money will be recorded on blockchain.
Now that just perked me up, because now the DAO sounds like a different kind of DAO in financial. We'll be back with more with Commissioner Gerald Rome from the Securities Division. Stay with us. Thanks so much for staying with us today here on Connect and Collaborate. We are connecting with Colorado's Department of Regulatory Agencies, and we're focusing on the Division of Securities with Rebecca Laurie and the Securities Commissioner Gerald Rome.
And to maximize our time, I'd like to just get right back into the conversation regarding cryptocurrency and where we left off, which is ICOs. And he was going into the explanation of some of how that works. So, Commissioner, can you give an example of an ICO?
Sure. Let me give you a real-life example. There was an ICO, and it was called the DAO. It was actually the first DAO And the idea was, and this is exactly what they did, is they would issue DAO tokens. This was all on the blockchain. And investors would buy the DAO tokens. And the concept was that the DAO would use the investor funds. People could then submit project ideas to the DAO, projects where the money would be used to fund those projects. And then the people who own the DAO tokens would decide by majority rules that whether or not to fund a project that came along. And the interesting part is that in 1 month, the DAO raised $150 million. Of funds to be used to fund these different projects. So the question from a securities regulator point of view was that a securities transaction? Was that a securities offering? And the SEC weighed in on this, and they issued a report in August of this year, a couple months ago, a 20-page report they called the DAO report. And so what the SEC did is took some law that the way the securities law is structured and applied it to the DAO situation, and came to the conclusion that these were securities transactions. So there's a definition of a security. It's a basic definition. It's called an investment contract, and it simply is if you invest money in a business enterprise and you expect a profit and you're relying on a third person to provide those profits, well, that's a security. And that comes from a 1946 U.S. Supreme Court case. But we still use it every day at the office. We always apply that test to all the kinds of transactions we see. So the SEC came out with a report and said, well, these are securities transactions. And these people who did it didn't comply with the law, and they needed to. So to follow up on that, and the way I sort of got into this is after that report came out by the SEC, I was called up and said, Jerry, would you like to be on a panel with two other lawyers to talk to folks about whether or not the SEC was right or correct in its analysis? And this panel was going to be held at a place called Galvanize down in the Golden Triangle, which is another incubator in town.
Right.
Yeah, and so I said sure. So that's when I really started getting into it, what blockchain was, and trying to figure out. And I'm sitting there thinking, well, I'm going to be with two other lawyers talking about this investment contract analysis, whether or not it applies to the DAO in this situation. And I'm thinking there might be like 5 people show up for this panel,
Right.
because it sounds pretty dry to me.
Right.
And so I went down to Galvanize, and it was just shocking. It was standing room only.
Ooh.
There were more than 200 people in this
Wow.
room. And they were all interested in blockchain and what happened with the DAO and with initial coin offerings. So what was even more interesting was sort of the atmosphere. It was almost a religious revival kind of atmosphere.
Really?
Yeah, there's all this energy. You could almost say that, this is like the new gold rush.
Something they believe in.
Yeah, exactly. They were all true believers, and they all believe that there's a lot to that blockchain and ICOs is the future, and there's a lot of money to be made, that there was gold in them hills. Right.
They aren't the only ones. Bloomberg published an article today that said, according to Google Trends, global searches for buy Bitcoin have overtaken buy gold.
Really?
Yes, and so in fact the interest in Bitcoin is now exceeding the interest in gold, which is fascinating, really fascinating. And so it is almost like the new gold rush. And one of the things we were talking about prior was the tech boom, and how it feels a little bit like the just belief in some of the tech startups. Right.
So it was just like that. When I was introduced to the crowd, the moderator said, introduced me as a commissioner, and he said he's the first securities regulator that we know of that's participated in a forum like this.
Oh.
And there was this big roar go up. Everyone was cheering. And I'm sitting there thinking, well,
You're like a rock star all of a sudden.
yeah, well, I'm not a rock star. And so, I was thinking about it, and it was just because it was the first.
Yes. Yes.
So these people, anything that's the
They're
first.
excited that you're getting behind it.
Right.
You're understanding it, and
Right. So
it's legitimizing it to that degree.
Exactly.
Yeah.
After the panel, there were at least 4 or 5 people that came up to me and said, "Jerry, we really liked what you had to say," which was hard for me to understand. But they said, "We're having this event. Would you like to come and talk at my event?" And I would say I'd be happy to do that. And I started thinking about it afterwards, and it was exactly that point. They wanted me there at their event to sort of legitimize what they were telling the people who were going to that event.
But it's interesting because it's this concept of legitimacy, yet they want it to be separate from any federal oversight or.
They want to reduce a lot of the red tape, so to
Exactly.
speak. Yes.
Yeah. So there's a balance there between
Right.
the legitimacy and the regulation.
Right, and my message at that forum was that these are securities transactions, and the securities laws apply, and you have to be careful. And if you're not careful, you could subject yourself to criminal liability, to civil liability, to large civil judgments. And so, it was a warning shot out into the crowd. But I don't know how many people that registered with. They liked that I was there, and I don't.
But they
think
still want it off the grid.
Yeah, and I don't think they. It was almost it went in one ear and out the other what I was telling them because they don't care.
There's gold in them.
But they like
it.
Yeah. Wow, that's fascinating.
So what should people who are interested in investing in cryptocurrencies be aware of? And like anything, I'm sure that there is potential for fraud.
There certainly is, and so going back to the Dow case that the SEC looked at, they raised $150 million, and in fact, their blockchain was hacked. The Dow's blockchain was hacked by some other smart computer people, and they lost 1/3 of their
value.
Yes. So they were buying the Dow coins with another cryptocurrency called Ethereum. So
I've heard of that.
Yeah, Ethereum is just like Bitcoin. And so you had to have Ethereum, and you bought the Dow tokens with the Ethereum. And so that's what's on the blockchain is your ownership of the Ethereum. They lost 1/3 of their Ethereum. They were hacked, which was surprising everyone. The people who put the Dow together were able to get a computer fix, and they were able to bring that money back. But it's just the dangers out there. I mean, just the red flags are all over. We talked about the speculative nature of Bitcoin, that someday that market may crash down to zero. Securities law is all about disclosure. What are the risks? What are the downsides? And this is all new and happening now. That that those sorts of risks are not being disclosed to people who invest, and they exist. So there's all kinds of issues. You and I talked earlier about the dot-com bubble and what happened when the dot-com bubble popped, and a lot of people got hurt simply because it was if you started a company and you put .com behind it, then you raised a bunch of money no matter.
That's all you needed was a .com, and all of a sudden the money flowed.
Oh.
And that's what's happening with these ICOs. 90 ICOs in the U.S. since the beginning of the year, raising over $1 billion. So it's out there. It is. I would advise. My advice would be not to invest in ICOs, but if you want to invest, you need to be very careful.
So overall, what it means is that the securities industry is in a period of transition, I'm assuming, with this. And, what's the quick wrap-up message, Jerry?
Yeah, be careful out there.
It's still risky, huh?
Yes.
Thank you so much, Securities Commissioner Gerald Rome, and thank you, Rebecca Laurie from Colorado's Department of Regulatory Agencies that we call DORA. Thanks both for being here.
Thank you. Yep.
Great information.